Good evening, guys. Currently, it's around 3:24. Market is about to close. Let's look at recap of what happened today in Nifty as well as Bank Nifty. You can see the market gap down 200 points in Nifty and almost 240 points in Bank Nifty as well. You can see clearly in 1 minute time frame. This is the S1 level, S2, S3 level, and this is the pivot. As the market gap down, took support from the S2 levels, reached all the way to S1 level, and further it faced rejection over here. And the market continued selling. As both Nifty as well as Sensex moves in the same way, let's look at the premium in both Sensex in comparison to Nifty 50. You can see here in Sensex, the market faced resistance over here. Here also the market faced resistance. See a pure rejection of price from this level, the 200 moving average as well as the R1 level. The pivots I'm using are the Cambrella pivots, guys. Here you can see here the pivot Cambrella. So you can see, for better confluence, you can see price gapped up here as price gap down here, the put premium gapped up and it took support here, guys. Here you can see both the R1 level as well as the pivot lying close to each other, which forms a sort of support over here. You can see the price gapped up, retraced back to the pivot, and again it rallied upwards. You can see clearly the premium almost doubled from here to here. If you would have bought your trade here, you could have easily double your profits. Here you can see another resistance over here, the S1 resistance as well as the rejection from the 200 moving average. 200 moving average. Coming to Nifty, you can see clearly that the market respected the initial candidate fib. I think this doesn't apply to Nifty, but for time being, let's see the first candle mid-range. You can see that the market broke structure towards the upside. Again, it faced some kind of rejection. If you try to apply these money concepts, if you use this indicator, guys, you can get a clear confluence like where exactly. You can see here it formed chalk, and this demand over here, again it swept liquidity, again it held higher. After this bullish momentum candle, you could have seen some sort of consolidation over here. Here in premium chart, you can see clearly that even after this bullish momentum, there was no much premium over here, and this bearish momentum, you can see there is no much premium move, but only on to the put side. And again, this consolidation over here, you can see this kind of consolidation and price taking support at the RSI level over here. You can see this momentum increasing along with price going upwards, but here you can see price clearly declining in the momentum. Here you can see as well from here to here, this momentum it was here to here, the momentum, but look at from here to here, this momentum has reached all the way, overpassing this momentum, same as here as well. So you can clearly see that there is some sort of demand over here when you try to keep this liquidity, the trendline liquidity, and could have entered long position keeping your stop loss just below this wave. and you could have exited at the R1 level. This is the R1 level, or you could have reached all the way to the 200 moving average. This is one sort of trade, guys, where you could have entered your trade. And you can see there are multiple rejection from the 200 moving average as well as the R1 level, and the price rallied downwards. And clearly you can see here, from this to this momentum, you can see a clear break of structure, and it faced another resistance over this 100 moving average. Here it might have crossed, but here it couldn't cross the 100 moving average. You could have entered a long position over here in PE side. See, if you try to plot here, so you can see clearly that this 200 100 moving average where the price couldn't cross, and it touched twice and rejected. And here you can see clearly trendline liquidity as well. After this rejection price momentum towards the upside, you can see this kind of trendline liquidity here. This liquidity pattern, guys, before the bullish momentum, you can see clearly this sort of momentum towards the upside. But here you can see after this breakdown, here it consolidated again, further breakdown, but here it moved high, retraced back, this kind of retracement. No, guys, you can see here it moved in sideways way. Here also you can see clearly after this break of structure towards the downside, here the price consolidated, couldn't cross this 921 as well as 100 moving average, and if price continued further moving downwards, and you could have targeted the VWAP level here, or if you could have tried the fib extinction levels here. As you can see clearly, the price broke this structure towards the downside, the last up move before the down move. Here you can see this is the fib retracement level, guys. Fib 50 is led to chop, and here it led to break of structure. And if you try to draw fib retracement level, common point between this and this, you can clearly see the 100 level. You could have targeted till this level, guys, or for God's sake, you could have also targeted this level. You can see exactly the price came all the way to 1.68 level. 1.68 level. And you can see further price continued downwards, and you could have just ride the trend, guys. Here you can see the 2.6. Here you can see clearly it went all the midway between this, guys, all the way midway between this. You can see clearly the price reached exactly at this level. You could have just tried your stop losses, guys. After reaching here, you could keep your stop loss here or here. If the price crosses the 100 moving average, you could have exited your position. For better confluence, you could also draw the VWAP level. Here you can see the price after this bullish momentum and after this bullish candle also followed by a bearish reversal candle. You can see price rejection over here. If you look at 1151 on premium charts, you can see at 1151, here you can see clearly on E side, this bullish momentum, this kind of bullish momentum is clearly bullish sign. But what happened in premium charts is that it couldn't cross the 21 moving average. Can you see, guys? Here it crossed clearly the 21 moving average as well as the 50 moving average, but here in premium you can clearly see that the price faced rejection from the 21 moving average, telling that the market is clearly bearish. And you can see clearly the market is trending downwards itself. Even after this bullish candle, the price faced rejection over here. Here you can see at around 1239. At around 1239 also you can see it couldn't cross the VWAP level. If you try to plot anchor VWAP at this high, And you can see here guys clearly it faced rejection. This anchor VWAP level, here it faced rejection, and here it clearly faced rejection guys. This 100 moving average as well as this VWAP level, it clearly faced rejection over here. Could have entered clearly short position over here, keeping your stop loss just above this wick, or after this rejection candle you could have entered keeping your stop loss above the high and targeting this 100% fib retracement or the 1.68 level, or you could have just tried your stop loss all the way till here guys, or you could have targeted this low, you could have targeted this low. Trading is all about risk to reward ratio guys. As long as you are good at protecting your capital and gaining small amount of profit, you will sustain in market guys. But once if you blow your account, then it's very difficult for you to regain such kind of confidence to take positions, or and gaining that capital also, it's very difficult guys. And this is about Nifty 50. And here also you can see after this low the price retraced back, breaking this high. It couldn't actually break this high, but if you try to plot anchor VWAP level, if you see any kind of support like here, but it broke structure towards the downside. But here you can see if you try to plot anchor VWAP level, after this break of structure it kind of faced rejection over here. You can see clearly the price facing some sort of rejection over here. If you consider this is as a swing structure, and if you try to draw fib levels, you can see clearly that the market couldn't cross the 0.38 level. The market couldn't cross 0.38 level, and it faced rejection and the price continued further. You could have just placed your stop loss here, long short position, keeping your stop loss just above this VWAP level, this anchor VWAP level, and you could have tried your stop loss all the way to your reward ratio. But if you try to plot the fib extinction levels from here, the common point between here and the common point between here as well as this common point, you can see the targets here guys. So you can see clearly the 2.681 target. Look at this guys. You could all the way target till the 2.68 level. You're getting guys what I'm saying? The clear trend, this structure which broke this structure and it respected 0.38 level and it continued all the way till lower. And if you also use this Lux Algo Smart Money Concept indicator, you can see here also it broke structure towards the downside, forming chalk. After this chalk, equal high liquidity it grabbed. Again it broke the structure, again it retraced back. You can see here this retracement towards upside faced some sort of rejection from this 9 as well as 21 moving average and continued further guys. Or you could have seen clearly even here that the price consolidated, couldn't cross the 9 as well as 21 moving average and price continued to sell further. Look at this guys, the 2.68 level, and here also it broke multiple break of structures, and all these levels are being respected. All these are a kind of trendline liquidity. When the market gaps up here tomorrow, or if continues selling further, these order blocks are all mitigated guys. So this order blocks doesn't hold any value as of now. So when these order blocks are mitigated, the price when it gaps up, it continues buying pressure over, because here the supply isn't strong as the order blocks are mitigated. And keep that point in your head. Here it broke this structure, respected this order block, broke this structure, respected this order block, again broke this structure, retraced back, took rejection from the 9 as well as 21 moving average. You can see these two candles, guys, which I have explained you earlier. Before it faced some kind of rejection, it continued to sell further, guys. I think it's very easy to explain when the market has already formed, and very difficult to explain at the live sessions, but sure, I will try to explain you on live sessions as well. I think that would really help you a lot, but for time being, today I was not able to record. I would definitely be posting your live trade, guys, on my channel. And now let's look at Bank Nifty. Bank Nifty also, you can see clearly that the market gap down. The gap down was around 200 for 30 points, I guess. It's around like 400 points too. It's like around 400 points. And if you try to plot, here you can see clearly the price took support from the S2 levels, reached all the way till the 100 moving average. But here you can see there are multiple rejections over here as well. But if you try to plot the VWAP level over here, clearly the price broke this structure here. This structure over here. This is a bearish engulfing candle. You can see the price retraced all the way up towards the 21 moving average, and here the price showed some kind of rejection from here, and again it retraced back here, took support from this VWAP, but here again it faced moving average rejection and it broke structure towards the downside, forming clear breakout structure, or you can call it as chalk. And this supply towards this retracement level, you can see clearly the price got rejected from the 0.38 level. 0.38 level. Here you can see clearly price rejection. If you try to plot the Fib extension levels from here, the common point between here and here, you can see clearly the price couldn't even reach the 100% level, telling that the market is not clearly bearish right now. Since if you try to plot again here, so sometimes the market will reach 0.5, 0.6 levels and will retrace back. But here it even broke this but couldn't reach this level. But for time being, let's consider this. After it crosses a 21 moving average, you could have exited your position. But this is quite unexpected, guys. But what is expected here is that if you try to see the premium charts in, if you say some random calls, this is a call and put, and this is the Bank Nifty. So this is how I trade, guys. You can see clearly here what happened is that after the market took support from the 9 as well as 21 moving average, and again the rejection of price from the VWAP, it continued further selling. As you can see, it continued further selling. But what happened here is that, look at this, guys. Here the market rallied upwards and the retracement over here is not good, that it formed a bearish engulfing candle as well as another equal size bullish candle. But look at this pattern, guys. If you have got what I'm saying, is that look at this channel formation over here. This channel, whenever there is some kind of bullish momentum, you can see here in RSI as well, this candle, this as well as this candle cross the smooth moving average over here, and it forms such kind of pattern over here. This is a clear sign of bullishness, guys. Whenever you see such kind of pattern with momentum rising, you have a better risk to reward ratio. You can just trade your keeping your stop loss just below this low, and you could have targeted this high, guys, or you could have targeted all the way till the 200 moving average. This is what I'm saying. This is a pure setup, guys. This always happens in Bank Nifty whenever you see some kind of pattern consolidation happening over here. But here you can see that there is RSI divergence as well. You can see it formed a lower low here, but here you can see the price formed higher high, the RSI divergence over here, and here you can see divergence on CE side as well, as price here formed lower low, but here in RSI it formed higher high. This is a clear sign of bullishness, guys. After one confluence is that even after forming lower low in the spot chart, the RSI formed RSI higher high, showing that there is bullish momentum over here. And after that, here you can see some kind of pattern formed over here. This pattern shows a clear sign of bullishness, and with confluence with this and as well as this RSI divergence, you could have clearly taken long position over here, expecting the market to go all the way till the 200 moving average. I think my viewers are able to understand what I'm saying. So you could have easily targeted with this consolidation, keeping your stop loss just below this pip, and you could have targeted all the way till the 200 moving average, guys. This is what I'm saying. And you can see the price after crossing the 200 moving average formed another bearish engulfing candle, and you can see the momentum here. It faced multiple rejections over here, and the price continued further, resulting in formation of chalk over here. Here also it has formed chalk. You can see clearly that the price has formed chalk here, breaking the structure towards the downside, or you can see even here as well. Clearly showing that the market is bearish, and this is 1 minute order block, and it broke structure towards the downside with a fair value gap over here. This is the fair value gap, guys. So after this fair value gap, you can see clearly that the market retraced all the way till here, but again it took support from this VWAP level and continued higher, but here it showed a clear rejection along with a bearish engulfing candle over here, and took support from here, and further it retraced back towards this but couldn't cross here. For best entries, you could have entered your position after this rejection candle, keeping your stop loss just above this pip and targeting the fib extension levels of 1.6 to any level, guys. Let's see the 100% level. Clearly you can see this is the 100% level. Clearly you could have targeted the 100% fib extension levels, or the 1.68 or the 2.618. Here you can see clearly the price retraced, went all the way till 2.68 level, guys. You could have targeted the 100% level over here, and the price retraced back to the VWAP level, but here it faced rejection as it couldn't cross the VWAP level, and again it broke structure towards the downside, breaking this structure down, and here it couldn't cross the 100 moving average. Again it formed some kind of rejection and continued all the way down, guys. You could have clearly targeted till here if you had been very good at trading, getting idea of how you should trade and all. You could have clearly traded till all the way here, but when you use smart money concept, you can also get another idea as well. See this broke structure towards the downside. If you try to plot the fib extension levels from here to here, You can clearly see the price couldn't cross the say 50 level over here. This is the 50 level. So price couldn't cross the 50 level over here. And if you try to plot the anchor VWAP here or here, let's take the swing high here. You, I think this high, I guess. Look at this, guys. If you try to plot this swing high, it couldn't even cross this structure over here. This is the 50 level as well as the VWAP level towards the downside. After this bullish candle, followed by piercing candles breaking the structure low, signifying that the market is clearly bearish over here. And if you want try to plot the fib extinction levels, keeping the pound punch here, and here, you could have targeted the 100% level or 1.68 level or the 2.618 level. This is another good setup, guys. And here you can see it broke structure but couldn't cross the 50 moving average and further continued selling downwards, and it continued all the way till here. And it broke structure this high. Here you can see, actually you should consider it breaking this structure high, but here it broke this last up move. And if you try to plot the fib extension of here, you can see some kind of support after here. You could have traded all the way up as well here, but let's leave that. But here you can see clearly what I was explaining, the rejection from 200 moving average, as well as here price rejection from here, price rejection from VWAP. This is the day VWAP and this is the anchor VWAP from here. This is another confluence, and if you try to plot another anchor VWAP level over here, you can also see resistance over here as these two up candles. Before it broke structure towards the downside, here it faced some sort of resistance as well. Here it took support here. You can see the chalk formation taking support from anchor VWAP, heading high. Again it broke this support from here and rejection from here. I think you're getting what I'm saying, guys. I think this, with a lot of practice, really you can take good setup, guys. Trade setup, and with better confluences and with better trading experience, you can really trade well. I hope this content is helpful for you to take your trading decisions better. And thank you, guys.